That's what we've got going on in these markets. Let's bring in our guest analyst for this Friday morning. He's always a Friday morning guest analyst. That's Mr. Craig Bolanos. He's with VestGen Wealth Advisors. He's a co-founder and wealth partner up in Chicago. Thanks, Craig, for being on the show.
Hey, listen, I kind of wish we were getting the jobs data. At this point, you may as well pile it all in, make it one bad week. I'm disappointed they pushed it off till the next, but I don't think we're bottoming yet, but it's getting close, Scott, getting close. This has been nothing short of brutal.
Yeah, I mean, it's been ugly. It's been a rough one to look at your 401k, and it's really on the, I don't know why, but it seems like the market wants to hurt itself. You know, it's almost like they can't believe that AI is going to be as good as it is. Everybody's really focused in on the spending. You saw the Amazon results last night, 2 nights ago, Google. All they care about is ROI on what they're, the return on investment, what the money is that they're plowing in to all this AI stuff. And the market doesn't like it. And I think that the market's being a little bit impatient, but the market is the market, and that's the true forum. We can't argue with the market, but I tell you what, we've definitely trimmed a lot off of these stocks. I know some folks that are really taking it in the pants.
Oh, no, there's no doubt. I mean, for me, too, that movement that you mentioned in silver, in gold, just the other week, followed by the absolute decimation of cryptocurrency, specifically Bitcoin, from 126 to well under 70,000. I mean, that's a big move, bringing us all the way back to where we are in 2024. But I just don't think the underlying story has changed. I think the de-dollarization trend is real. I think it's secular. It's not cyclical. I am not convinced that, software as a service needs to be completely destroyed with this SaaS apocalypse that we're seeing come through, but it definitely shows you how disruptive innovation can be, courtesy of Anthropic and some of the other moves that have come from Claude in these AI companies.
Yeah, it's like the market almost was worried that it didn't think about it first, right? And when they don't think about it first, then they have a really bad reaction. And then once they start to get a handle on it, things, or once the market starts to get a handle on it, things look like they start to come back a little bit here. But you're right about that Bitcoin price. I don't have it. I've never put a customer into it. I think that right now the problem with Bitcoin is the use case. I don't know why anybody's surprised about that. When you take a look at the artificial intelligence and the use case there, people use it every day, ChatGPT, Grok, whatever, so people can see how it's maybe can affect things. Gold and silver, you can go to Costco and buy a gold bar. You can hold it in your hand. It makes you feel like there's actually something there, and it maybe even makes yourself feel smart when we're trading $125. But when it comes to the use case for crypto, it gets a little bit more nebulous, right? I don't know why they're all of a sudden waking up to that, Craig, but it's not as widely accepted as a lot of those other things are, and I think they're trying to punish it now. So I think it's maybe a little bit of an undue punishment. We also have an act in Congress that they're trying to get going with crypto as well right now. And I think it's the Creativity Act or something like that. I can't remember the name of it.
Yeah, no.
But that should help, maybe.
Yeah, crypto's demise is not here. There's no doubt about it. There is going to be a broad swath of institutional support. I'm surprised some of that didn't step in yet. There's a lot of people who must have gotten margined and levered out in a very difficult way. But I think you still have to have this concept of pragmatic optimism for 2026, despite the year being a little bit rocky over the courtesy of the last 5 days. Because I think when we do get that jobs data released, I think it's going to show what we've moved from low higher, low fire into no higher, low fire. I think that's going to force the Fed's hands to make sure we get our first rate cut at that March or April meeting. I feel pretty good that we're going to get a second one later in the year. And I think the recipe is just in for the typical presidential midterm cycle where year number 2 is the worst of the 4. That doesn't mean negative. It just means sloppier trading, more volatility, and lower results. And that's what I want people prepped for, so they need to have that pragmatic optimism, and execution is going to matter more in 2026.
I mean, thank you for that. Great stuff. And I agree with you. Sloppier trading with more volatility also could mean more opportunity too, right?
Well, I think that's it. What I remind everybody of is if history's our guidance, the only guide that we have, that second year, that midterm in that presidential cycle, it's what sets up the opportunity, the VIX that you endure, the things that happen. It sets the opportunity up for the best year in the presidential cycle, which is always year number 3. So I think we're going to see some 20 to 25 House seats get flipped. That's going to happen. Nothing's going to go through in the Senate. And as long as it's not a wholesale change, but a partial change, I think we're going to be okay and the market's going to be just fine. It won't be full gridlock, but it's going to be tougher to get things done once we get through the midterm.
All right. Always the voice of wisdom on a Friday morning. I really appreciate you coming on, Craig. Craig Bolanos. He's a co-founder and wealth partner at VestGen Wealth Advisors up in Chicago. Thank you very much for being on the show. Have a great weekend, Craig. Loved having you on.